Hello everyone, the topic for today's discussion is marine insurance. Marine insurance is a type of insurance that covers cargo losses or damage caused to ships, cargo vessels, terminals and any transport in which goods are transferred or acquired between different points of origin and their final destination. It covers the losses or damages caused to ships, terminals and any transport or cargo by which goods are transferred, acquired or held between different points of origin and final destination. The term may also apply to inland marine, but it is usually used in the context of ocean marine insurance. Thus, it can be seen as the insurance designed to manage risks in the event of unfortunate incidents like accidents, damage to the property and environment or loss of life. When it comes to ships, the stakes are higher as all factors are involved in the operation, that is, risk of losing valuable cargo or expansive ships, the risk of damage to the environment due to oil pollution and risk of losing precious lives of seafarers due to accidents. Marine insurance is another variant of the general term insurance and, as the name suggests, is provided to ships, boats and, most importantly, the cargo that is carried in them. Henceforth, marine insurance should also be understood as an insurance contract. A contract which is signed between the two parties. The parties involved in the formation of an insurance contract includes: 1 is an insurer. The insurer is the party who offers the cover of the underlying asset and charges an amount in the form of a specified premium. 2nd is insured. The party who buys insurance, or we can say, who agrees to the offer given by the insurer and pays the premium. The 3rd party in case of marine insurance is an agent, who connects the two above-mentioned parties. The marine insurance can be bought through an agent only. Before going ahead, it is required to understand the structure and anatomy of a cargo ship so as to understand the subject matter for buying its insurance cover. The upper part of the ship is called deck. For your convenience, I have highlighted area in the blue box. A deck is a permanent covering over a compartment of a ship. On a boat or ship, the primary or upper deck is the horizontal structure that forms the roof of the hull, strengthening it and serving as the primary working surface. As you can see in the picture, the surface area on which containers have been kept. This area is used for many purposes. In case of a cargo ship, the deck may be multi-story, similar to the floors of a multi-story building, that are also referred to as decks, as are certain compartments and decks built over specific areas of the superstructure. Decks for some purposes have specific names. In the lower part of the ship is hull. The hull is the watertight body of a ship or boat. The hull may open at the top, or it may be fully or partially covered with a deck. Atop the deck may be a deck house and other superstructures, such as a funnel, derrick, or mast. The line where the hull meets the water surface is called the waterline. It protects the cargo, machinery, and accommodation spaces of the ship from the weather, flooding, and structural damage. Looking into the anatomy of the whole structure, it is clearly visible that the hull of a ship contains the isolated chambers which will keep the perishable goods and unaffected from the external environment factors, which includes humidity, temperature and other environmental deterioration. Marine insurance is applicable to the losses between the origin point to the destination. The persons who are importing the goods will like to ensure the safe arrival of their goods. The shipping company wants the safety of the ship. So marine insurance ensures the coverage of all types of risks which occur during the transit. Most of the times, it is carried out port to port, to ensure all the risk without the loss of monetary funds. Different maritime insurances are made compulsory for ships and ship owners to take. Only post that, the ISM can be implemented on ships. The types of marine insurance available for the benefit of a client are many, and all of them are feasible in their own way. Depending on the nature and scope of a client's business, they can opt for the best marine insurance plans and enjoy the advantage of having marine insurance. First of its type is hull insurance. Mainly caters to the torso and hull of the vessel along with all the articles and pieces of furniture on the ship. This type of marine insurance is mostly taken out by the owner of the ship to avoid any loss to the vessel in case of any mishaps occurring. Second type is machinery insurance. All the essential machinery are covered under this insurance, and in case of any operational damages, claims can be compensated post-survey and approval by the surveyor. Third type is protection and indemnity insurance. The term protection means risks which are connected with ownership of the vessel. For example, crew-related claims. While indemnity are the risks which are related to the hiring of the ship. For example, cargo-related claims. This insurance is provided by the Panty Club, which is ship owners' mutual insurance covering the liabilities to the third party and risks which are not covered elsewhere in Standard H&M and other policies. Now talking about the basic characteristics of marine insurance. An insurance due to the principles of a typical contract which can be observed as the acceptance for the proposal against the consideration. Firstly, a proposal is made by the insurer-provider which is to be accepted by the insured. This agreement has to be agreed upon with the confirmation of legitimate consideration, then the final issue of the insurance policy can be made. The principle of insurable interest states that the person getting insured must have insurable interest in the object of insurance. A person must have an interest in the physical existence of the insured object. Upon its non-existence will give him a loss. In simple words, the insured person must suffer some financial loss by the damage of the insured object. At the same time, nothing should be concealed or misrepresented while agreeing to the terms of an insurance contract. It should be signed with an absolute good faith, belief or trust. Indemnity can be understood as compensation given against damage, loss or injury. In an insurance contract, the amount of compensations paid is in proportion to the incurred losses. Note a point here. Insurance is only for giving protection against losses and not for making profit. Subrogation means substituting one creditor for another, means he is now going to represent you before the other party. A warranty in an insurance policy is a promise by the insured party that statements affecting the validity of the contract are true. Most insurance contracts require the insured to make certain warranties. They are of two kinds: implied warranty and express warranty. An express warranty is an agreement by a seller to provide repairs or a replacement for a faulty product, component or service within a specified time period after it was purchased. Buyers rely on these promises or guarantees and sometimes purchase items because of them. The warranty can be worded in many different ways. It may say something like, "We guarantee all furniture against defects in construction for 1 year. When a structural defect is brought to our attention, we will repair or replace it." There is some consideration of express warranty. For example, if a consumer buys a business jacket online, but when it arrives the item is the wrong size, wrong color, or is missing buttons, an express warranty might entitle the consumer to a refund or replacement. In such cases, the online seller is usually responsible for footing the bill for any additional shipping charges. Auto dealers tend to advertise express warranty terms for repairs on the vehicles they sell. This can include stipulations on mileage and length of ownership that limit the extent of that coverage. After the vehicle is owned for a certain amount of time or driven beyond the mileage limit, the express warranty would no longer be applicable. An implied warranty is a legal term for the assurances, written or oral, that a product is fit for the purpose intended and is merchantable, that is, conforms to an ordinary buyer's expectations. The warranty of merchantability is implied unless expressly disclaimed by name, or the sale is identified with the phrase as is or with all faults. The implied warranty will include that the ship should be worthy of sailing in the sea. Means it should be suitably constructed, adequately equipped with safety equipment, well repaired and properly managed for any mechanical problem or physical damage to the ship. Likewise, it should be sufficiently fueled so that you're not stuck in between. and the ship should be capable of withstanding ordinary strain and should not get devastated during small windstorms. Talking about the legality of the ship, the cargo should be legally authorized and able to complete the voyage. Moreover, should not be idly in the voyage or change in the schedule of being relieved from the origination port. The ship should not be obliged under any implied warranty of nationality. Phone meeting all these features for the formation of a marine insurance contract, a policy can be finally be issued. The next thing that comes to your mind while buying an insurance policy is what is to be protected. What thing we are going to buy the insurance for, and what is going to be the value of it. The first thing that we can buy insurance for is the hull of the ship. We can buy insurance for the whole body frame of the ship, which might include the machinery, accessories and other installations on the ship for its functioning, safety and other operations. This is also to be noted that a ship takes a very long time to get manufactured. It is somewhere like 7 to 10 years. Henceforth, the manufacturer can protect the ship during its construction also. Next is the insurance policy for the complete cargo. In the cargo itself, an array of insurance policies are available, like we can buy the insurance for goods and oblique or the commodities that has been kept either on the dag or in the hull. The insurance policy can be bought for the given time period. Like we can buy the insurance for 3 months effective from today itself. That means the shipment is covered under the policy for 90 days. Meanwhile, the ship might travel to a single destination or might complete several voyages. Can be understood as the round trip between two points. Like if we are sending goods from Kenai Port to Sri Lanka full stop, then the voyage will be completed when the ship will return to Kenai Port after delivering the goods at Sri Lanka Port. Third category of marine insurance is right insurance. In this case, premium amount is to be paid for the covering transportation only. There can be 2 alternatives of paying this amount. It can be either an advance before the release of the ship from the origination port, or it can be paid after completing the transportation and delivery of the shipment at the destination port. So we have got 3 types of subject matters for which the insurance policy can be purchased. While traveling in the ocean and in the long voyages, there can be a number of reasons behind the losses, accident of the cargo. How the major parallels are identified as fire, war, pirates, thieves, Jettison in the barratary. Latest understand these all individually. Talking about war, thieves and pirates, such instances are hardly observed these days. The perils on account of pirates, rovers, and thieves were common in olden times, but it has been reduced considerably these days. These acts are generally committed for the pursuit of individual gain by the persons beyond the jurisdiction of a state. The term thieves does not mean clandestine theft or a theft committed by any one of the crew or officers or passengers. In olden times, fire was the biggest maritime perils, but recently it has been under control to a greater extent. Damage resulting from fire includes damages caused due to its smoke arising therefrom. So, this peril is also insurable. The damage due to spontaneous combustion may be maritime peril and be insured against. Notably, the losses occur due to the water used for extinguishing the fire is also covered under the marine insurance. Also remember that lightning damage is happening to the cargo and not covered under the loss of fire. However, the fire caused by lightning can be recovered from the insurance provider. Moving forward with the jettison, which means voluntary throwing away of the cargo or part of a vessel's equipment for the lightening or relieving the ship for common safety. The aim of the intentional throwing away of the goods or property is to relieve the vessel from some imminent peril. Remember, the accidental falling of things does not constitute jettison. And also the own inherent vice of cargo is also not included in the jettison. Now, the barratary. It includes every wrongful act willfully committed by the master or crew, the prejudice of the owner. The act of barratry must be committed without the knowledge of the owner, It includes the theft, the setting fire to the ship, fraudulent selling of vessels and cargo, without the connivance of the ship owner are the various examples of the barratary. The insurer is liable for losses arising out of barratary, if barratary insured. Because of the discussed, we will incur losses. But that loss can be total loss of goods, or partial loss of goods, or incurrence of additional charges. Total loss can be either actual total loss, or constructive total loss. Actual total loss occurs when a ship is completely destroyed. When a ship is sunk or catches by large fire. Under this situation, a ship is completely destroyed. Constructive total loss. This occurs when the ship is abandoned for certain reasons. It is not commercially viable to retrieve the ship or cargo. In another case, if the insured is not able to get the things back, that is, if the ship is missing and there is no trace of it, it is also a case of actual total loss. In case of actual total loss, the insured is entitled to recover the full amount of loss. When the insured has been compensated, the title of goods passes on to the insurer. If some amount is received from the sale of damaged goods, the amount will go to the insurer and not to the insured. Constructive total loss occurs when the ship is abandoned for certain reasons, and it is not commercially viable to retrieve the ship or cargo. The ship or the cargo is not wholly destroyed, but it is not practicable to get it repaired and restore it to its original position. When a ship is badly damaged, and the cost of repairs is expected to be more than the value of the ship, it will be advisable to abandon the ship. In the same way, if the cargo is safe in the abandoned ship but the cost of bringing the cargo to the coast is more than the cost of cargo, then it will be proper to leave the cargo. In the case of constructive total loss, the insured gives a notice of abandonment and surrenders its interest in the subject matter to the insurer. The insured can claim damage for total loss. The next type is partial loss. When the subject matter is partially damaged, it will be a case of partial loss. It is of two types. One, particular average loss. A particular average loss is partial loss of subject matter insured, caused by a peril insured against, and which is not general average loss. A particular average loss is not caused voluntarily. The insured subject matter should be damaged, and this damage should be caused by marine peril which is insured. 2. General average loss. A general average loss is caused voluntarily to avoid an impending danger. A general average loss is one which is caused by an extraordinary sacrifice or expenditure voluntarily and reasonably made or incurred under fortuitous circumstances, for the sole purpose of preserving the common interest from an impending peril. Let's say, if a ship is sinking because of overload, some of the cargo may be thrown out of the ship with a purpose to save the ship and the crew. It will be a case of general average loss. Let's move to the biggest question arising out of it. Once we incur the loss, if our shipment has been damaged partially or completely whatsoever, how to claim the insurance we have bought? Then, please understand that for a missing package, the insured must file a monetary claim with the insurance provider and get an acknowledgement for it. In case of loss or damage to the cargo or the ship, you need to immediately inform the insurance provider. The insured will have to submit the original insurance certificate with the policy number, copy of bill of lading, original invoice, packing list, shipping specification, copies of correspondence exchanged. A surveyor will assess the damage or loss mentioned in the claim or the missing report. The surveyor will submit his assessment report of actual loss with all the proofs and witnesses along with the duly filled claim form. If the provider finds the case fit, it would approve the claim and the loss incurred will be indemnified, means the money lost be paid off. In case the provider does not find the case fair, it would reject it. But, if you are not satisfied with the case, you can approach the court of law. The last step is the handing of the letter of subrogation to the provider, that in case the actual loss was caused because of some other party and can be recovered. Then, the provider will file a lawsuit to recover the money and the court fee. For any feedback and topic inclusion, please write in the comment section. Please like and share the video to learn more topics. The next thing that comes to your mind,
don't forget to
while
subscribe
buying an
to the
insurance
channel
policy, is
Autodidact
what
to
is to
stay
be
updated.
protected.